Good morning. Good morning, ladies and gentlemen. Welcome back. Welcome back to another pre-market watch list. Thank you guys again for tuning in, as always. Thank you. So we'll wait a few minutes here till some people come in as usual. Then we'll get rocking and rolling and take a look at a few things. All right, sounds good? Okay, sounds good to me. Thanks. So yesterday ended up being a pretty good day. I don't know how many of you guys ended up trading Roku, but Roku was the main watch for me yesterday, and we ended up getting the long play we wanted, that break, over resistance, and so we had pretty much just a straight shot up, and it worked beautifully. So yesterday, I don't say a lot of, but I think it was the first 3 1-minute candles on Roku were trying to get sold into and shorted into, and they kept creating a nice lower wick. Which then turned into a perfect long short squeeze you ended up jumping on. That was the best trade of yesterday. I think I traded 3 tickers yesterday. I traded Netflix, AMD, Roku. I think I made like close to 900 on Roku, 200 on about 200, maybe 250 on Netflix, and like 125 on AMD. So it ended up being a good day. All right, so we'll jump into it. We'll get started here. Let me get to sharing my screen. So couple things, really just really 3 stocks I'll be keeping an eye on today. Maybe more, we'll see, but there wasn't a whole lot that looked really good. So we'll start here with PDD. So PDD earnings play, if you look, you can see the stock is clearly just kind of climbing up and grinding out this morning. So from 26 to basically $30. Now, if you look at a 4-hour chart, it'll help you see what's going on. You can see the price action is still grinding up, and it's really just entering into the sell location here of the 52-week high. So in reality, most people would look at this stock on the day and go, wow, this is performing really well. This is a great buy. But in reality, it's a great time to be selling. I know it seems odd, but that's the fact. So if they're the average person, they're going to look at this and go, this is a great time to buy. Not really. This is a great time to be selling. Right, because the way it works is, right, everybody who's been long in here, long in here, long in here, now they're getting ready to sell onto you, sell onto you, sell onto you. And this is the 52-week high around 32. Now, it doesn't mean that the stock isn't going to go higher on the day, but it's just to point out the big picture. And the big picture is that this stock has now entered into its 52-week high selling location. So this is probably also a good one to keep on watch for the next couple weeks for even like a short trade too, or maybe a short swing trade. One second. Yeah, we can take a look at the SPY. So this is something to definitely keep an eye on. So far this morning has great pre-market trading, decent volume, good formations. So this is something that we'll be keeping an eye on throughout the day. There's really no specific level to keep an eye on right now. All you really have is just a bunch of dips and stuff pre-market, previous highs. So, if you want, you can map out, previous tops, previous bottoms, again, previous tops, breakout levels, because each one of these levels could play a significant role throughout the day, where if the stock breaks down, starts falling down, you can see it bounce off of any one of these levels. So again, just map off your pre-market tops, your pre-market bottoms or support holds, dips, and keep those on watch throughout the day, intraday, because again, if it starts to fall sharply, it's probably going to find support around one of those pre-market levels today. It isn't like your gap and go where it kind of just gaps up and goes sideways and it's pretty clear cut, where it's an over-under play, basically over pre-market highs we can see a squeeze, below pre-market supports we can see a drop. So this one is actually trending right now. So that's the difference, is this isn't actually, it's starting to trend pre-market, which then makes it a little bit more, gives it a little bit more character going into the trading day. So PDD definitely going to be on the strong watch for us today. I wouldn't consider trading JAGX today, and the reason I wouldn't really consider it, it's not that something magical can't happen, but look at it. If it really was that magical, or the news was really that great, then it wouldn't look like it just wanted to commit suicide, right? It basically went up, chopped its own head off, and then died. So again, it's really not. It's basically telling us the full story right now that it's probably not going to be a good trader on the day. That's so yeah. For me, it's over the years. I mean, it's come pretty easy to pick and choose what you want to trade on the day, and that's another thing too. Like when you just start out, there's so many things to learn and so many stocks to look at. You don't even know how stocks typically move, so it can take you a long time to kind of build a watch list and really pick and choose what you want to trade. You might be looking at a handful of stocks and go, I kind of like this one, but I kind of like that one too, but I'm not really sure. Whereas for me nowadays, I can take 5, 6, 7 stocks and go, yeah, I don't want any of those. That's the one I want in a matter of a minute, right? So, it took me about a second today to look at JAGX and go, I don't want to trade that. And that's because of its chart formation. It doesn't tell me that it wants to be good on the day. It could do something magical, but I'm not going to stress and put too much effort into magical, right? Because that would be magical if it did do something good. And if it does do something really good, then that's really out of the norm, and that's not something I should ever anticipate, okay? Now, let's head over to Target. Target's interesting. So I actually I did like a small little scalp short today on Target pre-market and made $75. It wasn't anything big. It was just, I just knew we'd probably get, it was actually right here. I literally shorted like right there at that top. Actually, I have it in here. It was really one short right there, and then I think I covered up like right there. It was just a small little pullback that I knew we'd probably get, and so I just made $75 on it. So anyways, Target is trading pretty well today. Not pretty well, very well. It's into a 52-week high. So whenever a stock like Target, not a stock like Target, but whenever a stock goes into a 52-week high, like Target is doing this morning, I'm a little bit more inclined to actually see more upside movement because it doesn't have, at least on this chart, I mean, I guess it could if I go back far enough. Let's see. Yeah, no, I mean, this is the highest Target's ever been ever. So, again, whenever they're into like a 52-week high, I'm a little bit more inclined to see more upward movement because there's no price action that it can actually bump its head on. So there is something to take note is that we are at the $100 mark. The $100 does tend to be a good resistance point. So today, might be a good idea to even consider a short trade off 100. We'll see how we've already kind of rejected here, pulled back, we came again, we're kind of hanging below it. So first, initially, I'm going to be watching this short off the 100. If that fails and starts to press over 100, then I would watch it long. But for right now, I kind of want to be short on it right at this 100 mark. I mean, it's already moved from 85 to 100 from yesterday, so that's 15 points to the upside. So over 100 strong, I'll be long. Below 100 weak, I'll probably be short. Well, no foul, or however you pronounce your name, I apologize. So something to consider, right, is more often than not, I come to find that when people like get into trade and like, man, it just never goes in my favor. More often than not, you're probably entering a position during a consolidation phase, and if you don't recognize that you're in a trade, that you're taking a trade that you want to go one way or the other while in consolidation phase, then you're going to constantly get chewed out. You should only be looking to be on like a short trade. You should only be looking for a big directional move, ideally from a very low point for a long play or a very high point for a short play, but you never really want to hold and anticipate a big move to come, during a phase of consolidation, because it's only going to happen if the stock breaks out. And the key word there is if, right? If it breaks out. If not, then you're just stuck right in the middle of this consolidation. So with your 180 put, it's like, I don't know when you got it, but if you were to go look at Facebook right now, Facebook's really all it's been doing is just consolidating for, I think, past couple days, maybe a week. Be great if it loaded. That'd be great. Yeah, so I don't know when you got into your position. But if you look at it, I mean, we just came off a down move, right, to 176, and now we've bounced, right? So the likelihood that you get below 176 is not likely because we just came from a high point, sold down, we just bottomed, we bounced. You're at least going to test that, but you're most likely not going to break it. So now you're just sitting in the middle of a consolidational move, which means it's not breaking up and it's not breaking down, right? So so I don't know when you got it, but that's generally just it, right? Whereas if you were shorting up here, your play would have been easy breezy, right? And if you're getting long, in here, it still wasn't even that good because really the majority of the move came from that gap up. Like if Facebook would have opened that day right here, it would have been great because you wouldn't be able to pull a 176 long. But considering it gapped here from 176, opened up at 183, you just lost a 5-point potential move to a gap up that you wouldn't have been involved in unless you were buying the day before. So anyways, if you're buying into consolidation, that's normally what's going to happen there. All right, last one on my list that we'll talk about is lows, and then we could take a look at some other things. So LOW, pretty straightforward. There's a gap there. So there's a gap fill. Hold on. Excuse me. Yeah, so anyways, LOW, lows, earnings report, did really well. You can see it's up, from 97 to 110, so it's up, decent 10, 12, 13 points. Right here is a pretty decent resistance at about 112, 111. So this is another thing we'll be watching, initially long. Actually, no, probably going to be watching this short bias with the potential support hold around 107.20s to 108. So initially, I'd probably watch this, it seems like a lot of our earnings plays have been pulling back out of the gate. So really the two ways to play this is if it looks good, has a lot of strength moving over the pre-market high, you can look for a long play, but just know that you have resistance right at a 111. So unless lows truly wants to break over that resistance we've pointed out, you're going to be longing right into a sell. So this is one that I'll be patient with. But again, like I was saying, good ways to go about this is, track for long over pre-market high breaks. But again, you have resistance right at about a 111, 112. So again, if you get long at 110, you get up $1.50 up until the next resistance sell point, which could then dump on you. Or we look for it to pull back initially out of the gates, hold 108, hold 107.63. If it does, you could look for a dip long on that point. That's the only other earnings play we're following. And then everything else is just kind of like ho-hum today, and I'm not probably going to be following much of that. Good morning, Peter. Appreciate you joining with us. I get this question quite often is what do I look for in a swing trade? Yeah, I always get the question what I look for in a swing trade. And everybody's generally always looking for me to tell them something magical like, well, when the MACD crosses here and the RSI lines up here, while you have resistance and support here, then you should do this and you should do that. But at the end of the day, really, it is as simple as buy low, sell high. I know it sounds pretty stupid and babyish and childish of me to say, but it's true. It's buy low, sell high, meaning look for something that's been absolutely beaten down and buy it on the low. And then vice versa, shorting, look for something that's been skyrocketing ridiculously, that's been overbought, and sell it, right? What does that mean? Well, if something's been absolutely beaten down and it's at an extremely low point, then what do you think is going to happen to the RSI? The RSI is going to be oversold. But I don't look for the RSI to be oversold because I don't need to look for RSI to be oversold when I know something's oversold. If something drops 30 points in a day, I guarantee you the RSI will say it's oversold. So it's not I need to look for RSI to be oversold. I don't need to look for RSI. I need to look for what is telling the RSI, right? And price action tells you right? Always understand that price moves, then your RSI moves, then your MACD moves, then your moving averages move. So everything in regards to moving average, MACD, any indicator, it will always be a lagging indicator to ultimately price action. So again, it always comes down to buy low, sell high. So what is a good example of that? The one that I'm actually currently long on, which is NSP for a swing trade. Yeah. Right there. I bought this one. Buy low, sell high. That's what I bought. So I started buying this the other day. I started buying it on that green day. I missed the ultimate bottom because I'm a knucklehead, but I started buying it regardless, anticipating we're going to see a little bit of a move back to the upside, right? So I wasn't looking at any moving averages. I didn't look at the RSI. I just simply went, yep, this thing gotten crushed. I'll buy that. Is KH good for a swing? It could be, right? I don't know that it is, right? You're looking at KHC, seeing that it's got absolutely hammered, but KHC is also one that's had some issues with their accounting. I want to say that was the problem, or something about their always being late on their quarterly results. But KHC, I mean, you can see it, right? If you go look at KHC, you have to be able to tell yourself that this is something you'd have to hold more long term. Because look at the way it moves, right? Watch KHC. Like, that's downtrending, right? Like, is it a good swing? I mean, it could be. I'd be more inclined to be on the short side of it right now because it is, in fact, it's downtrending. I mean, you hold, down, back up, down, right? Whereas something like NSP seems far more predictable because it's not really downtrending. It's went up, crashed into support, bounce, right? This thing is creating pretty identifiable levels to trade off of. Whereas if you go look at KHC, I mean, it's just kind of like a straight, down, up, straight, down, straight, down. So again, there's really not... so again, it's pick and choose, but, like another one I was looking at was ILMN. I never ended up getting long on this, but this is another one that I'd be following. This is actually probably going to turn into a short trade down to like 270. So there's probably about 15 points to make there. But again, this is another one where I would consider getting long around 268. If this breaks down into that level, I would look to buy right at about 270, right? And so the problem that I see a lot of traders make is, what is the one thing that you hear, okay? Or let me rephrase this. You guys could all look at NSP, excuse me. You guys could all look at NSP and go, that's a good level to potentially buy. And you will say that to yourself. You go, yeah, that 80, 90, that's a good level to buy. And then when it gets there, you'll start to see it move and bounce and you go, well, I want to make sure because I'm still a little hesitant. And then you kind of hold off, and the next thing you know, the day pops, and it pushes up again. You go, shoot, I knew I should have bought. Because you're so patient on waiting for not patient, you're hesitant. You're hesitant, always waiting for the confirmation or the signal that says it's a buy, and then you end up missing the move, right? So in order to start hitting more moves, don't be as hesitant. Just pull the trigger and get in the trade. Because more oftentimes than not, you'll know what's going to happen. You see it. You're like, yeah, I'll buy there. That would be a good buy. And then you don't even buy it, and then it goes without you. You're like, wow, that was pretty stupid to me. It was obvious, right? And really just comes down to generally being scared of wanting to get into a position because you're scared of losing. You go, well, what if I buy here and it goes lower? I mean, I don't know. What if I buy a house and then there's like a hurricane or a tornado and it tears my house? I mean, it is what it is. Shit happens, right? Welcome to the game of trading. If you try and be perfect, you're not going to be perfect. Right, and that's the other thing is like I agree with people like, oh, we'll wait for confirmation this or, I mean, like, I don't know, I guess everybody has a different opinion, but it's like, wait for, it's what I say is like, oh, wait for a higher low. It's like, how many higher lows I've seen turn into a bearish pennant and then dump out? It's like, so how does the higher low even, so again, what I always found that works great for me is just buy the absolute low and short the absolute top. And then what are people going to say about that? oh, that's like trying to catch a falling knife, right? Like that's a terrible idea. I mean, yeah, it would be a terrible idea to try to catch the bottom of something when it's not the bottom and it's meant to go lower and then it just rips down, right? I'm not buying something in the middle of a move. No, I'm buying something at the bottom. I know where a bottom is probably going to be. So it may look like a falling knife, but it's a falling knife going right into a piece of concrete. It's not going to go much further, probably, right? So again, comes down to experience, but that's generally how I swing trade. I look for things that get absolutely annihilated into an obvious support, and then I just buy it. Let's see. Hold on. Sorry, guys. Patrick Ryan, can you explain how earnings plays? If it goes up, then it will go the opposite way the following day. Yeah, see, so on the day of the earnings, people might be buying it, and then on the day after the earnings, people are just selling it. That's what's creating. And that's the other thing, right, is I see a lot of traders get caught up on the idea of trying to know everything in the whys, but you never will. So stop trying to figure it out, right? So why do stocks go up? Because people buy them. Why do stocks go down? Because people sell them. Why are people selling them? I have no clue. Somebody's child could have broke their arm and now they have medical bills they need to pay for, and now they're selling Home Depot the day after the earnings report. Someone got arrested, they're on probation, they got a DUI, and they have expenses they need to pay for now, and they're going to have to sell stock. Who knows? What we do know is that it goes down because they buy and they sell. And they could be, right, off of different levels. Generally it. I can't say much more than that. Could be at resistance. There's multiple reasons why, and trying to figure out every exact scenario will just lead you further and further and further down a rabbit hole that you'll never get out of. BYND is probably going to head down to like $90 a share. Yeah, that's another thing. I guess another thing that Ashia or Mrs. Fooch pointed out, don't buy bad stocks for a swing trade. Buy good stocks for a swing trade. Like I could, like buy Facebook on a dip. Even though it goes down the next day, there's a stronger chance it'll be back up the next day or the following day or the following week because it's Facebook and it's not, Bitcoin at $20,000 or RKDA at like $30 or BBTH at $75, right? It's a reputable stock that rallies. So yeah, PJ. So generic question. Yeah. So no. It's not the penny stocks are garbage. They are. 90% of penny stocks are garbage. They can have big runs. Sure, without a doubt. To be completely honest, I mean, like if you really want to actively trade, you need at least a couple $1,000s, right, to actively trade stock. You can actively trade options with far less money. All you really need is like a couple $100 to trade options. Let me rephrase that. All you need is a couple $100 to trade anything. All it comes down to is how much money you're going to try to make yourself, right? If you're going to go out and try to make a bunch of money without a bunch of money, it's not going to happen unless you hit home run trades, which again, not going to happen. So again, you generally get feeded this idea in the trading world through some guy's YouTube ad or some Facebook ad that shows a McLaren and a Lamborghini and some takeout and making a bunch of money, when in reality, for the average person, that's not going to be the case. And that's what I generally try to teach and preach, is that it's not going to be that way for most people. And it's still not even like that for me. I mean, I don't drive a Lamborghini. I don't drive a Ferrari. I live within my means. I try to save more than I spend because I know that I can have a Lamborghini and I can have a McLaren and I can have, a Ferrari and all these cool things if I choose much more comfortably later on in life by living within my means now and making smart choices now so that in the future I'm not worried about my medical bill or not being able to play golf 5 times a week, things like that, right? So I look at things long term, whereas most of the people kind of flash it like, hey, look at, we made this and I'm driving a whatever, or I'm riding in a yacht, or I'm on a beach, right? Cool, fun, but I'd much rather take my $2,000 win, short-term income, and then put it right into long-term investment and not even think about it. Because then that $2,000 is going to be worth $26,000. So I'm taking my $2,000 short-term win, putting it in long-term, and making $26,000 out of it long-term, right? So the idea that you're going to make a lot of money very fast trading, it's just not going to happen, especially for a beginner. So then you might get pulled into trading options because somebody tells you that options can make you much more money faster than trading stocks because they have more leverage. But what they forget to tell you is that there's a time frame on them, and it's actually far harder to learn options and become consistently profitable with options than it probably is stocks. So there's just a lot of like tugging and pulling in this world. It's just not realistic, right? Like the small account that I bought NSP with, I bought like 3 shares. It's an account with like a couple $100, and I do that. I love it. I love having a small account, and I will literally buy a couple shares. Like, look, I think I bought 3 shares of NSP, so it's like a $280 trade or something like that, $200. And right, there's potential for this to go up to like 105, maybe 110. So I'll make $30, maybe $25 on those 3 shares. Not a bunch of money, but I'll take it. Right, and that's what it comes down to. Imagine if you did that for your whole life. Start with $300, make $10 here, makes $20, then you make $100, and you make $150. Now you're making $200. Now you're making $300. Now you're making $1,000. Now you're making $2,000. Right? Everyone is just so ready to look at the top of the mountain, but they're not ready to make the hike up the mountain. Right? Everybody just wants to go from the bottom of the mountain to the top of the mountain. And they just forget to look at the whole freaking hike that it takes to get up there. And then they get really sad, and then they get demotivated when they realize that, holy shit, this is going to be much harder than what I seen on an ad. Yeah, and just like B Custom said, you don't need tons of indicators and all this. Like, I use them to an extent, but all it comes down to is price action, buying and selling. How do I see OSTK? I'm not going to look at OSTK right now, but if you want to trade OSTK, also follow the price of Bitcoin because they're kind of directly tied at this point in time. Yeah, and I trade stocks, I trade options. I don't trade futures, I don't trade Forex, though I probably will at some point. I just haven't really upgraded my account or dived into that world yet. How do you find stocks like NSP? By following the market, and that's another thing. Everybody thinks that finding stocks is all about having scanners, and it's not really the case. Finding stocks is all about being involved in the game. That's what it comes down to, right? See, like, I know absolutely nothing about who's the best baseball player with their RBIs and how tight they wear their pants and what type of tobacco they chew on the baseball field. And I don't know which quarterback's the best in the league with the best stats. And I don't know which basketball player is the best with the best stats or who's going to what team or who's getting drafted where. I could find that by going on some website and searching because I don't know any better. But if I would take the time to invest into being involved within the NFL and football and basketball as much as some fanatic sport fans, then I would probably come to find and just know who are the best players and generally have a good idea of their stats and what team's probably going to be good this year and what team's really shitty, and which means the teams who's at the low this year because I'm involved in that market. So the more you get involved and the more you keep up on it, the easier it becomes just to know what's going on. Like I know, generally where the prices of stocks are right now. Like, that is something better to know, right? It's probably better, right? I have friends that know way too much about sports, right? Granted, you can love sports. That's fine. I have nothing against sports. If you make money doing shit with sports, like you do a YouTube channel or you have a blog or a website, like that's great. Then you should know about sports. But really, there's no reason on earth any regular day person should know all the stats about all the players on a basketball team unless it's making them money. Without it, it's just a hobby it's just a hobby, right? I would much rather know the prices and the stats and all the things about every single Fortune 500 company in the world, because that is what makes the world go round and that's what makes people live in. Like, I'd much rather know that info than somebody's RBI on a baseball team. See what I'm saying? So just the more you get involved, the quicker you're going to find these things. But yes, you could use FinViz for scanning, and there's multiple scans. Just go on FinViz and just start typing in a bunch of stuff and hitting search and scanning. You'll start to come up with scans that work well that you'd like. I'm going over 9. That's right. All right, guys. I got to run. I got to get back. I do appreciate it. So thank you guys once again for tuning in as always. We got some more videos coming as always, and I'll see you guys on the next stream, which will be tomorrow morning. Everybody, take care.